Oil prices dipping below the $60 level. It's the lowest that we've seen since April of 2021. There you can see where crude is trading, $60.43. Joining us now is Jeff Currie, Carlyle, Chief Strategy Officer of Energy Pathways. There's a lot that goes into why we're here, Jeff. How much is tariffs? How much is other surprises on the supply side of things?
I would put 2/3 of it is demand, concerns around the trade war, and then a third on OPEC. Remember last week, they surprised significantly to the upside with a bigger increase than what the market had thought. You also had, the Russians allow the CPC pipeline to go online. So you had supply events in there as well as the demand concerns.
I mean, you never want to try to look at the silver lining of something that it's causing so much pain in other markets. But when does, well, number one, how low could crude go? And when does that actually become at least a partial offset to some of the things we're worried about? I mean, it filters through to everything price-wise if it's $50 a barrel.
I mean, yeah, if you want to call it a silver lining, you got low oil prices, low interest rates, and a weaker dollar out of all of this. But there is a point where they go so low, they start to create new kinds of pain. And, we look at the U.S., it has energy dominance because of the profitability of these oil companies. But you're sitting in WTI terms at $60 a barrel. That's below the break-evens of some of those shale guys at 65. You go down below 55, you're now below the economics of the Permian. The administration has made it clear they want to get into that 50-55 range, which, from our perspective is going to create, problems for many of these producers. And, Joe, you and I have been doing this a long time. We know oil doesn't like to do three-point landings at anybody's price. And, the potential for this to overshoot into the low, the mid-40s, I think is quite high. The market's oversupplied if you assume you're not refilling supply chains for what's going on in Iran, and this continues on. So the potential for this to overshoot to the downside, I think, is pretty significant.
The potential, but it's not your forecast right now?
No. But, I think at this point, nobody really has a forecast. I think what you're witnessing is a lot of liquidation. And the market's going to try to figure out the economics of it, in the coming weeks. But, right now, I'd argue it's liquidate everything first and then start to figure out the economics second.
How about all the other commodities that you follow? What about copper?
On copper, you've liquidated a lot in the U.S. recently because of the fact that they did not apply the tariffs to copper, and you brought in a lot of copper under that expectation. So you've seen a huge retracement in copper. I think when we look at the longer term, the fundamentals are still there. I think everybody buys into that longer term fundamental story because you see it in the back end of the prices. However, it's got some headwinds just like oil and the rest of the commodities do right now.
What's happening in those other two spots we always talk about with oil, China and Russia? And Russia escaped the tariffs, yeah?
Yeah, but you look at the fact that they brought on extra supply. You take that OPEC increase, last week. A lot of people thought it was a warning shot across the bow for Kazakhstan cheating. Well, the next day on Friday, Russia allowed the CPC pipeline to come online or not be shut down. Which then that takes away that explanation, which, the question is how much supply are Russia and Saudi going to bring on? Which then you can bring into the question, is something going on in Iran? So I think that's the way to think about Russia and Saudi. But then there's the question you point out about China. I can point out China's the largest oil importer in the world, and they just levied U.S. oil at a 34% tariff. That's a lot of oil demand coming out of the U.S. that's going to be pushed back. The one thing about U.S. exports that are very different from other countries' exports is that when we look at them, they're fungible. They're raw materials, things like, oil, things like agriculture. These are fungible commodities. You take like soybeans. China can get them from Brazil. It doesn't have to take them from the U.S. China can get oil from OPEC. It doesn't have to take them from the U.S., which takes away the strength of negotiation with these raw materials. And so that's one thing that needs to be kept in mind is that protection of the U.S. energy dominance here. It becomes more difficult when you have competing supplies out there. Also, one point I want to emphasize, what are the lawmakers that are breaking ranks in the Republican Party right now? Texas, Nebraska, Iowa. These are the sectors that are going to get hit hard in this if you actually see the retaliations take place.
That's interesting. They're the ones who are starting to break ranks, where you're starting to hear some speaking up. I know Grassley and some of the other senators. At last count, I thought there were 7 Republican senators who would side against this. That raises questions, and I don't know if you've done the guesswork to try and figure out how likely it is for Congress to intervene, Jeff.
No, I haven't sat down and done that as of yet. Like, going back to the point, everything's liquidating. But I would argue, to your point, the sectors that are going to get hit hard in this are the ones that are big exporters, which are energy and agriculture. And those would be the sector. In fact, you saw that the soybean farmers came out this morning, wanting bailouts, which is part of the reason why you have, Iowa and Nebraska pushing back significantly on this. So if you saw,
they get bailouts, that uses the money that you'd be potentially making from these tariffs.
Right, but why destroy the sector that's driving your export?
I'm just saying it's not going to go to the things that the administration has laid out and said we're going to use it for these other purposes. It's going to have to go to help the people who are getting hurt.
Yep. Exactly.
So if we want to squeeze China, Jeff, then how do we squeeze them? We can't do it with energy and agriculture because, as you say, it's fungible. Who's got more staying power, China or the United States?
Well, the question is which, the consumer, which one's going to get hit harder from this? Given the fact that most of the imports coming from places like China they're not fungible, like the consumption that China has from the U.S., which is fungible, means that the consumer can't substitute out of it, which means that tariff is going to get passed through the consumers in the U.S. more directly than it will to the Chinese consumer, because that Chinese consumer is consuming a raw material like soybeans, which they can just go directly to Brazil. Right. So you ask who's going to be the big benefactor from this? It's going to be OPEC, and it's going to be Brazil. It's going to be those alternative suppliers.